AMH, you heard what he said there about that meeting with the Crown Prince. He said it wasn't all about oil, it was about other important things.
Yeah, it certainly was. Obviously, everyone's going to point to oil because when Russia invaded Ukraine, energy prices spiked. That was really a tectonic shift for this White House to really start re-engaging on a deeper level with the kingdom, and that really pushed the president to make that trip. But there's a number of issues at play: climate, investment. Yesterday, Jonathan, we had a 2-month truce extended in Yemen. These are all really important factors. Also, the United States yesterday approved missile sales. Needs to go through Congress still, but approval of Patriots to Saudi Arabia, approval of other missiles to the UAE, a number of discussions. And I think one thing the White House wants to make clear, yes, this is tiny. I have covered OPEC before, not as long as Julian Lee, but I've covered it for years. 100,000 barrels a day is very, very small. It's symbolic and it's token. But what the White House wants to show is that the past 2 months, there's also been some goodwill from the group, increasing capacity. What they're looking at is the direction of prices. What the president has tweeted this morning is the fact that a majority of gasoline stations now are actually selling gasoline under $4 a barrel. That's the price that matters to this White House.
Julian Lee's right with us right now. Julian, we can make this political. We can make this about geopolitics and foreign policy. BTIG called it the foreign policy equivalent of a slap in the face. The administration's pushing back against that. I think what we've got to focus on is spare capacity within OPEC. Julian, how much spare capacity is there actually? And what does this decision this morning actually speak to?
I think there's relatively little spare capacity. I mean, you know, the spare capacity, I think, exists within Saudi Arabia and the United Arab Emirates. I don't think there's anything very much anywhere else. Saudi Arabia may have 1 million barrels a day or so. The United Arab Emirates may have about half of that, maybe a little bit more than half of that. But that's probably it. And if you look at the OPEC Plus group as a whole, in June, and that's the most recent month that we've got complete figures for, they were pumping about 2.8 million barrels a day below their target. So there's a lot of oil that is there in theory, but isn't actually there in practice.
So, Julian, I think this gets to the big important issue right now. Just how fragile is the supply backdrop going to be through the next year or so? We've really aggressively taken down the SPR to attack oil prices. Yep. You've got OPEC telling us that they've got issues with spare capacity. Julian, what does this mean for price going forward?
I think it means that prices are going to stay very volatile. I mean, you know, what we've seen happening in the last 2 to 3 weeks, we've seen Libyan production, which had been hit hard by, again, civil unrest in the country. That's started to come back. So we've had maybe 500,000 barrels a day, maybe even more than that, added by Libya in the last 2 to 3 weeks. That's a significant increase. But Libya's production, I think, rests on some fairly shaky foundations, and that is the country holding together and these two rival governments being able to sort of negotiate the frictions between them. So, you know, I'd be worried about Libya being able to sustain production at its current level of about 1.2 million barrels a day. There's not a lot of spare capacity elsewhere. We've got EU sanctions on Russia that are due to come into effect in early December. I still have huge reservations about how a price cap is actually going to work, and whether Russia would agree to sell under those terms.